This is Greg and Candace Quimby. They run a home-based business selling custom fishing tackle to customers all over the world. They make a good income from their business, about $50,000 a year, but it's not quite enough to support their growing family. So Candace has decided to get a full-time job, making $30,000 a year to help support her family. What the Quimbys have failed to take into account is that Candace's new job has created numerous non-tax deductible expenses because she has now turned from being self-employed to being an employee. Candace is now being hit with federal and state taxes of 25%, 6.2% in Social Security tax, labor and industries costs, unemployment tax of 1.45%, gas to travel back and forth to work, lunch meals, dry cleaning, and finally childcare costs. Candace's total expenses are now $30,795, thus resulting in the Quimbys losing $795 a year. Her new job also reduced the amount of money they were making when Candace was helping Greg with their home-based business. After a year with Candace working away from home, their situation did not improve as they had anticipated, but was actually much worse. Because the Quimbys did not have the proper tools to manage their home-based business tax deductions, they ended up paying government agencies thousands more than they should have. You see, Greg and Candace, like everyone else in America, are part of a two-tiered tax system. The first is for employers who pay their business expenses first, then pay their taxes on net profit last. The other is for employees that have their taxes taken out first and then receive whatever is left over as their take-home pay. The Quimbys have now found they are both an employer and an employee. So what's the solution to their problem? These are home-based business owners/employers. They knew they could deduct all of their basic business expenses first, leaving the taxing agencies fishing for whatever is left over. That's one of the benefits of owning your own business versus being just an employee. In the U.S., there are over 100 tax deductions available for home-based business owners. But even the 6 biggest ones are either not understood, not used, or underutilized by most home business owners, which are home office deductions, travel costs, business use of your vehicles, hiring your children as employees, healthcare costs, and meals and entertainment. Since the Quimbys run their own home-based business with the utilization of the OPARA tax system, the Quimbys can deduct a portion of their rent, mortgage interest, repairs, insurance, maintenance, and utilities. They are also eligible for tax deductions for using their own vehicles for business purposes. A 50% deduction for business meals and business entertainment, 100% deduction of health insurance premiums, and sometimes even a deduction of their life insurance premiums, thus saving them thousands of dollars a year. And that is only the beginning.